Hello and welcome to today's Institutional Traders live webinar. My name is Richard and you're all very welcome to join us for what is a 60-minute live webinar where we will be taking an in-depth look at some of the high probability trading opportunities on daily time frame price charts, because what we'll be looking to do is to capture some major market moves. Just before we begin, if we can start, as we always do, with our disclaimer, please do familiarize yourself with this disclaimer, and familiarize yourself also with the risks involved in trading the financial markets. Obviously, what you will experience over the course of this particular webinar is a strong focus on risk management. So we do try to do our best to mitigate against a lot of the risks involved in trading the financial markets and exposing capital in adverse ways. So hopefully you've had an opportunity to read our disclaimer. So just to cover a few pieces of housekeeping before we begin, feel free to ask questions throughout. You can do this by locating a chat box on the right of your screen. For those members joining us this evening, this webinar is live and it's being recorded, and it will be placed into your members area once the webinar is concluded. And we will of course have our normal Q&A session at the end of this webinar. So what are we trying to achieve? We simply want to help you improve your trading skills. We want to enable you to increase your knowledge and understanding of the financial markets. We're eager to equip you with the ability to remain and practice consistency in your approach. Be disciplined when it comes to taking losses, and patient when you trade as well, knowing when to trade and when not to trade. And of course, like I've alluded to, we do trade the financial markets with a strong emphasis on risk management. So in this live webinar, we'll be doing a number of things. We'll start off by reviewing market moving news events, see what has shaped and impacted these markets over the course of the last 24 hours. Then we'll amend the current trades. We're currently in one particular trade this evening. So we'll have a look at that market and see how that trade's performing. And by amending the current trades, we mean maybe we look to mitigate loss, maybe we look to book in profit, or whatever the case may be. So it's a real live experience in trading these markets. Then we'll have a look at reviewing the remaining charts. So we'll see what other opportunities may lie elsewhere, and we'll plan those trades before we finish this evening. Okay, so without further ado, let's begin with reviewing potential market moving news. And for this, I shall be bringing up Forex Factory. So today is Thursday, the 19th of April, and we had some employment data out impacting the Australian dollar, and the unemployment rate came in as expected, which is 5.5%. The unemployment change came in as a slightly negative figure. They were expecting 20.3, and the figure came in at 4.9. So it was a minor miss on the employment change figure. The only other news for the day, and one of the reasons why we like working with Forex Factory, is it can it can identify some of the more let's say important news events of the day. And as you can see, 9:30 we had retail sales figure out, and it was a minus 0.1.2, so it was actually less than expected. And we'll have a look at the pound chart very, very shortly. In addition to that, nothing of major importance really. What we can see tomorrow is some CPI data and core retail sales figures. And again, we're looking at the hit or the miss. Do we achieve these numbers? Are the numbers printed in excess of these numbers, or do we actually miss the expectations? And as a result, that will impact those markets, or it's likely to, accordingly. Okay, so that just about covers the news for this evening. So what we'll do now is we'll go straight over to the charts, and we'll just bear some of that information in mind. And if we bring up our charts, and what we start with is with amending the current trades that we're in. So as you can see down the bottom here, we took a trade yesterday in the dollar CAD. The reason for that trade was a pullback off the highs to a major level of support in this market around the 25.60 level. And as you can see, prices procrastinated around that for a good few days. And now we have seen that bit of bullish price action breaking higher. And we were able to get into that trade just fairly recently over the last hour or two. So what is our expectation for this market? We would anticipate prices to basically move from this level. If we continue to break higher, and there's obviously a question mark around that, then we'd expect prices to push up to the low 129 level. So from a risk reward perspective, it stacks up. We're looking for probably a 2-to-1 risk reward in this trade. However, we do have the flexibility to make decisions at any point throughout. So if the sentiment changes, or if there's anything technically of concern to us in this particular trade, then we'll either mitigate risk, we'll take risk off the table straight away, and we may even look to book in profit depending on what's happening in the price action. So for now, with regards to our stop loss, we're placing our stop loss beneath the low, and we just want to see a continuation over the next couple of days, in which case we can look to mitigate risk and take risk off the table fairly quickly in the dollar CAD. So that's a bit of the logic and understanding behind the trade. So with that in mind, let's review the remaining charts and see what opportunities may exist. And we'll start, as we always do, with the dollar index. So to just reiterate something, obviously we discuss every night, but we're in a sideways moving pattern. Yes, we are seeing a little bit of bullish price action today. Most of that is in the last couple of hours. If I show you an hourly chart, the last 3 to 4 hours, as you can see, we've had this explosive move to the upside. So it's relatively late in the day, and we are getting this bullish bit of price action in the dollar index as a result. But do bear in mind, if you are trading this market, you are trading within approximately in between two levels of support and resistance, one at the 90.88 and to the downside the 88.15 level. So those are the market conditions. We are sideways moving, and the same, as you can see, applies just an inverted picture of the dollar index as the euro dollar. So yes, we are looking like we're breaking lower, but we're not doing with any significant conviction. A market we were just looking at was the pound dollar, and you can see how this market has sold off in the last couple of hours. So looking at the time frame, what's important to notice from a technical perspective when we look at this market, and you can see how you can extend this level down quite considerably. You can see how price is behaving, and we've actually got a double top in this market now. And if I zoom in, this particular price action is more of an ascending, what's called an ascending triangle. And what we mean by that is at every opportunity in an ascending triangle where the price meets the lower or the ascending line, let's say, is fairly straightforward. Now we can actually potentially look for maybe an opportunity to buy this market over the next day or so. However, there is a major caveat to that. If we get an explosive move, and I'll zoom in a bit further, what we need to see now is some kind of doji candlestick, something that just enables this market to just slightly pause. And if you get that, like we saw back in this point back here, the market bounced back to that level. we got an indecision candlestick and potentially a good opportunity for a reversal, and that's exactly what we saw. And in fact, each time this market bounces back to these levels, you can get into these markets to the upside. But what we'd like to see is a nice small range, a nice doji candlestick, which means a little bit of indecision, and it could be an opportunity to look to capture this market back up to this level. Now, we'd always be mindful in terms of the potential for price to react around the 43, 44 level. So it is likely to provide a little bit of resistance, preventing prices from pushing higher. So with that in mind, we'd want to take on board what price action is going to be doing over the next day or two. That will be all important. Now, the major caveat to that is if tomorrow prices continue lower and we start seeing this, then a potential to even consider buying this market is off the table. So we're not interested if we get a confirmed break beneath that level and we get continuation pushing prices lower, which is quite possible. Bear in mind a lot of the fundamentals behind the pound. It's very, very possible. Even today, we've had Carney from the Bank of England suggest or explain to the market through the BBC that the Bank of England will be looking to increase interest rates on a number of occasions. What he could not stick to was the time frame. So we have to take that into consideration, the fundamental actions and behaviors as a result. So sorry, let me see. Francisco, you're saying, is there any problem? I'm not sure what you mean, Francisco. Maybe you could expand a little bit. Just checking everything on our side. The sound and everything seems to be working fine. The visuals seem to be fine. So perhaps you could expand for me if you can hear me okay, and if you can certainly see our trading screen. Okay, I think everything is fine on our side, Francisco. So maybe it's a local issue on your side, perhaps, if you lost sound. Okay, but look, let me know if it happens again. But yeah, everything seems to be fine on our side. So let me know. Okay, so this is the pound dollar. So really, it's tomorrow's price action that will be very, very interesting for us. Looking at this ascending line. So moving on then to the dollar yen, this could be a very, very interesting market for us, and we'll have a look at the bigger picture. If we get a confirmed break above this level, then it could constitute an opportunity and a little bit of a reversal of fortunes, really, for the dollar against the yen. So we've had a significant devaluation now over the course of the last year, and we're kind of at the lows. And this is a potential kind of reversal kind of setup where we're seeing a number of structural failures to the upside, and a break above the more recent high would constitute potentially an opportunity to push this price higher. Now, we do say that bearing in mind what's happening with the global indices, and the role that the yen seems to play in that. So we're going to reserve a little bit of judgment just for the short term. Now, we've discussed the dollar CAD in detail, so we're currently in this market to the upside. We'll wait and see if we get additional opportunities to add to that trade. Maybe we do get that opportunity where we can take risk off the table and take another trade, perhaps to the upside, if the technical setup allows us to do that. The dollar is strengthened against a few trades, and one of these is the Aussie dollar. So we are seeing this this little move lower, and it's adding a bit of momentum to these levels. And as you can see, prices are squeezing lower. And in actual fact, what we're going to suggest, this level in here, the 76.97, is a significant level, and it has been for a period of time. So we are going to we are going to actually take a trade on this evening, and it is from a technical perspective where we're going to look to enter beneath the daily low, place a stop loss above the daily high, and see if we get some continuation in the dollar against the Australian dollar, with a view of prices pushing down to these lower levels. So from a risk reward perspective, it stacks up. Also from a technical perspective, we've got a series of lower highs in this market, which I am viewing this level here as a lower high, and we also have a series of lower lows. So what we need to see from this market is price action to penetrate and to break through this previous low, and if that's the case, we are very likely to see prices push down to the 7,500 level. So this market still has a little bit of work to do. If it starts procrastinating around this area and we struggle to break the 76.90, or it's actually the 7,700 level, if we fail to break that, then this might be a trade. We might take a small win, or we might even break even on this trade. If it really struggles to break these lower lows, then what that might sort of suggest is we actually get this little bit of strength coming back into the Aussie. So we are going to recommend taking this to the downside. So it will be adding to the current dollar CAD trade, and obviously looking for this dollar to strengthen a little bit more. Another candidate, something that we've been looking at certainly in our live trade rooms over the course of the week, is looking for opportunities to sell. You can see though the reality of the close. It does pull back a little bit more than we would ideally like, and today prices were looking quite bullish for the majority of the day before we had that significant turnaround. So we want to see how prices interact with these lower levels. So we're going to we've made the decision to sort of run with the Aussie dollar and not get too active with the New Zealand dollar. Another market which has been quite interesting to see the turnaround, where from the pound had looked very bearish, expecting prices to push lower, although that's not what we saw. The UK government took a defeat in the House of Lords with regards to the trade with the European Union. So that's an interesting development for the British government with regards to Brexit negotiations, and what that can lend itself to is more of a softer Brexit. And the reality of a softer Brexit, ironically, is often better for the British pound. Now, in addition to the Brexit negotiations, there's also the concern on the inflation side, which is a concern for the Bank of England. Now, they have alluded to the fact that rates will be being increased. It's just not, Carney is not really committing to any specific time frame for those rate increases, and just referred to it as over the coming years. So we're not overly surprised that prices has bounced back in above the 86.91, because with all the rhetoric that's coming out from either the Bank of England or the Brexit negotiations, what we're likely to see is a little bit more of this sort of price action with what was an initial break lower. So be prepared for continuation, certainly while these Brexit negotiations are continuing, because what we might see is traders a little bit reluctant to commit to either direction. So it's just a heads up. It's only an observation, really. It's we will obviously trade price action, whatever that means and whatever that will yield for us. But it's just an observation that we might just see continuation of prices bouncing between the 8,800 or 8,900 and the 8,700 level. So so we watch that as it grows. Moving on then to the Euro New Zealand, the Euro Yen, should I say. This is very choppy price action. This is something that doesn't really interest us right now, but we will continue to watch it very, very closely. So the S&P 500 next. It's a bit of a strange market. We saw this explosive move a couple of days ago, and as you can see, we haven't really had the follow through, which you would expect off the back of some good positive numbers being released in the US. And so the market is obviously looking at these trade wars and obviously the consequences of coordinated airstrikes in Syria, if there is any, and how those will play themselves out. So there's obviously still continuing to be a little bit of fear or anxiety, and as a result, they're not moving in a way in which we are overly comfortable, let's say. So so let's monitor and watch some of these global indices for a little bit longer and see if we do get any clear-cut opportunities. The same price action applies. We're just rolling over today, so let's see what happens over the next couple of days. Again, the same with the Nasdaq. Like this is quite a potentially a reversal signal, like we've seen up here. It's got an aspect of it which is a little bit engulfing. It's engulfing the previous price action. Ordinarily, it might represent a good opportunity from a technical perspective to actually sell this market. However, we don't feel like the conditions are premium, because we do like to assess risk, and we do like to assign a certain portion of risk to the trade, make sure it's as high probability as possible, and we don't really see it stacking up like that over the short term. But again, these are markets to be watched very, very closely for a period of time. The FTSE market is seeing a little bit of a bounce off the back of the pound and the selling which has come into the pound dollar. So we are getting a little bit of a boost as a result in the FTSE market. Again, you know, these global indices, we need to reserve a little bit of judgment. It's okay, it's price action moving to the upside, but you know, it's very, very choppy, and it's very, very difficult, and it's not really giving us the setups that we ordinarily look for. So as a result, we're quite happy to just step back and apply a little bit of patience, which is a very important skill when learning how to trade, is knowing when to trade and when not to trade. So we'll get loads of fantastic opportunities. It's just now is not really the time for being super aggressive, certainly with the global indices. So give them time to work themselves out and present opportunities that we can actually trade with it with a higher degree of confidence. So that's always important. The gold market, it's just moving sideways. Again, we're within this level. We're within this range of support and resistance, 1365 to the upside and 1306 to the downside. So we're just procrastinating, as we are in the euro dollar and the dollar index, in between those two levels. So unless it reveals itself, again, we'll apply a little bit of patience to that market also. This was an interesting market. This was very bullish for the majority of the day. You can see our ascending line here at the top right hand corner, and price has bounced off that to the absolute point. So what this market has done is represented a fantastic opportunity to buy it on an intraday basis, and subsequently looking to sell it. So we'll have a look at it on a 15-minute time frame. Sorry, let me zoom out just a little bit. So you're seeing these prices really get within a few pips away from our ascending level, and then we had a series of structural failures pushing prices lower as a result. So let's see what happens off this basis here. There is a basis forming around the 6,800 level, or the $68 level, should I say. So we might see those prices attack these highs once more in the near future. So from a trading perspective, we're going to wait for that opportunity. We constantly look for opportunities to buy this market it just makes sense from a technical perspective to be looking to buy this market from these lows, and capture as many of those opportunities as you possibly can. So now we could be heading for a little bit of a reversal off this top level, even if it's only short term. So definitely a market to watch for now. So that just about concludes the review of our markets for the day. So one market we're actually going to look to take to trade is the Aussie dollar market. And the principle is simple. We've identified the potential for a downtrend in this market, and we're looking for what we hope is a lower high sitting in this market. And to be accurate on the price, the high is the 78.12 level. So 78.12 to the upside, with a nice risk reward to the downside as well. So what we're going to do is we're going to take this particular trade, but what we need to identify first is exactly what our entry price and stop loss is going to be. So when it comes to the entry, we're going to take the low, today's low, which is the 77.18 level, and we want to make sure we don't place our pending order at the low, just in case price moves down to it and literally reverses off that level. So when we trade daily timeframes, we're looking at daily highs and lows, and we're seeing how price interacts with the daily high and daily low. So if we get a break below the daily low, we'd expect prices to continue lower, and if we get a break above the daily high, then we'd expect prices to push higher. So so what we need to take note of is the spread in the Aussie dollar, and as you can see, there's a 1 pip spread, and that's the difference between the bid and the ask. So what we'll do is we times that by 2, so we'll add a 2 pip spread to the low of 77.18. So our entry price to the downside is 77.16. 16 to the downside, and our stop loss is 2 pips above the high, 78.14. 78.14. So we're just over 100 pips difference between our entry and our exit. So when it comes to taking a trade, we're trading the Australian dollar. We want to make sure we buy this market below the current price. So we want to make sure that we're trading what's called a sell stop order. So the price we want to get in at is 0.7716, and the price that we would like to place as a stop loss is 7814. So you can see the difference in pips. We're talking about a 98 pip difference between our entry price and our stop loss. So we're quite happy to take this trade to the downside, but only if we get a break of today's low, and I'm happy to place that trade, and you'll see it now in your portal, or sorry, terminal, just at the bottom of the screen there. So there's our Aussie dollar. We're getting in at 77.16, so we're very accurate and precise with our entries, and our stop loss is 78.14. So on the screen, you can see the entry price in green, the line just beneath today's daily low, and you can see our stop loss just above today's daily high. So that is the only market we're going to suggest taking for this evening. So we will see how prices react and how the dollar performs over the next day or two, and hopefully we'll get a nice little push lower in this market. So that just about concludes things for this evening, but that does conclude your Institutional Traders Live for this evening. So thank you all very much for joining us, and we do look forward to seeing you all next time. So from everyone here, bye for now.